Ladies and gentlemen, good day and welcome to Action Construction Equipment Limited Q2 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Tina from Motilal Oswal Financial Services Limited. Thank you, and over to you, ma'am.
Good afternoon, everyone. We have with us the management of Action Construction Equipment today, and from the management team, we have Mr. Saurabh Agarwal, Executive Director, Mr. Rajan Luthra, Chief Financial Officer, Mr. Vyom Agarwal, President. So we'll start with the opening comments from management, and then we'll open the floor for question and answer. Over to you, sir.
Yeah. Good afternoon and welcome everyone to this earnings conference call for discussing the results for the quarter and half year ended 30th September 2023. Along with me in today's earnings call, we have our CFO, Mr. Rajan Luthra, and our President and Head of Investor Relations, Mr. Vyom Agarwal. I hope that all of you have had an opportunity to look at the company's financial statements and the earnings presentation, which have been circulated and uploaded at the stock exchanges. The company sustained its growth momentum, and it gives me immense pleasure to inform you that this has been yet another quarter of strong performance by our company, wherein we have again surpassed our projected growth targets. We were yet again able to record our best ever quarterly performance in terms of revenues and profits. We continue to remain long-term debt-free company, and the P&L performance and the balance sheet strength of the company is now significantly improved from the past, which seems to be sustainable across business cycles. To brief you on the standalone financial performance of the second quarter of FY24, the operational revenues grew by 36.83% on a year-on-year basis to rupees 672 crores, with an EBITDA margin of 15.73%. The EBITDA during the quarter increased to rupees 105.75 crores in comparison to 52.56 crores on a yearly basis, which is a growth of more than 101%. The PBT and PAT grew by 106% year-on-year to rupees 96.59 crores and rupees 73.71 crores respectively, while the PBT and PAT margins stood at 14.37% and 10.96%. This has resulted in our best ever ROE and ROC levels at 28% and 38% respectively on annualized basis. On a sequential basis, the operational revenue was more or less flat with 3.4% growth. However, EBITDA grew by 8.5%, PBT grew by 8.25%, and our PAT grew by 9.6% as compared to quarter 1 FY24, with margin expansion of 75 basis points during the quarter. It is important to note that despite the increased baseline, the company achieved its highest ever revenues, EBITDA, PBT, and PAT margins for the quarter, owing to industry tailwinds and our sustained focus on cost efficiencies and customer-centric approach. In the quarter gone by, we reiterated our dominant market leadership position and registered revenue of 460 crores with margins of 15.5% on a year-on-year basis. The crane segment registered a robust revenue growth of close to 30%. Similarly, on a year-on-year basis, we were able to achieve almost 100% growth in our construction equipment segment, clocking a revenue of 108 crores with margins at 12.72%. The material handling segment grew by 26% to rupees 44.72 crores with margins at 12.81%, and agri segment, the revenue grew by 33% with a 4% margin profile. Further, for H1 FY24, we've been able to grow our revenues by 33.61% to 1,323 crores on a half-yearly basis. On a half-yearly basis, EBITDA grew by 107% to 203 crores, PBT grew by 116%, and PAT grew by 118% to 186 crores and 141 crores respectively. A couple of years back, we had set ourselves a challenging goal of delivering sustained profitable growth and it gives me immense satisfaction to inform you that for the first half FY24, the margin profile of the company stood at 15.3% EBITDA level, 14% PBT, and 10.6% PAT, which represents a healthy margin expansion of 500 basis points year-on-year. Our consistent strong performance is reflective of our strategic clarity, strength of our brand, capabilities of our team, and our agility to run the business. We have a clear and compelling strategy, and with our positioning in infra, manufacturing, logistics, and agri sectors, underpinned by strong operational excellence and our distinctive capabilities, we will continue to drive growth and create a purpose-led, future-fit organization. On the operational side, the global economy remains in a grip of marked slowdown. However, India remains a bright spot with buoyant tax collections, moderating inflation, credit growth uptick being some of the key positives amongst various other indicators. While public investment remains strong, consumption demand has been relatively subdued, especially in the rural market on back of subpar monsoons and persistent food inflation, which saw a sharp spike during the quarter. Green shoots of recovery are visible with prospects of improved agri output, onset of festive season, increased FDI in manufacturing, sustained government spending on infrastructure, and private sector capex revival. All this augurs well for our company. We believe that going forward, the demand scenario should remain strong, aided by government's unwavering focus on urban infra and rural infra. Further, we have completed 75% of the envisaged brownfield capex of 90 to 100 crores for the current year, and the expanded as well as the new facilities have been made partially operational in quarter 3, and would be completely commissioned in quarter 4 of the current financial year. The new manufacturing facility for higher capacity slew cranes, that is truck cranes, crawler cranes, and rough terrain cranes, will increase our capability to manufacture higher capacity slew cranes by approximately 4 to 5 times, as we aspire to grow in the higher capacity crane segment in India, with continuing infrastructure growth in the country. This new plant will simultaneously enable us to release capacities of forklift and tower crane business by about 40 to 50% each. Since currently these activities are in a combined plant, and by shifting to a new plant, we will unlock the capacity of these two segments as well, that is forklift and tower cranes. This capex will expand our capacities and will enable us to attain a revenue in the range of 4,000 crores at full utilization levels. Going forward, we would like to revise our earlier guidance, and now we expect a growth of at least 25% in crane segment for the current year, and reiterate the growth rates of at least 50% in construction equipment segment, 15 to 20% growth in metal handling and agri segments during this year. On the whole, we are now looking at a growth in excess of 25% with expansion in EBITDA margins as compared to last year. We hope that we are in a position to further revise these projections by the third quarter, which will predominantly depend on the overall macroeconomic scenario, especially with the impending elections and the higher base effects. Further, we remain optimistic about the medium to long-term prospects of the company and believe that our building blocks are firmly in place for sustainable growth in all the 4 segments where we operate, leading to expansion in top line, bottom line, and margins of the company. With this, I would like to open the call for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Satradru Chakravarti from Chakravarti Family Office. Please go ahead.
Yeah, hello, good morning. Congratulations to the management on a very good set of numbers.
Yes.
I have a couple of questions, more on the accounting side rather than the operational pieces. My first question is really around the inventory picture. So 2 things. I see there is a provision for slow-moving inventory taken out in the statement of cash flows for this quarter. And I also see that there is certain increase in inventories in this quarter as compared to the last quarter, also for this half year as compared to the last half year. Can you just provide me in general what exactly is happening on the inventory picture? Are we producing much more than we are able to sell, or is this really the raw material prices which is hitting us, or whatever clarification you can provide around this?
Yeah, regarding the slow-moving inventory, Mr. Luthra will answer. But regarding the balance of the inventory, yes, our inventory in the current quarter has increased from about 90 days to 107 days. This is owing to the extra demand that we expect because of upcoming festive season at the end of September. So this was taken care of in October. And so that's why the extra inventory built up at the end of September, because of festival season beginning from October and November, where we increase sales. That is the main reason, and I'm very sure that in Q3 or at the end of Q4 we will be at normal levels and would be around 90-95 days, where we generally are. And Luthra, regarding that provision or whatever for slow-moving inventory, you can answer that.
Yeah, so basically we keep on verifying all our inventories regarding whether they are slow or they are not moved for a certain number of days or months. So, and based on our review of this 6 months, although there was no such number coming for the last year, but when we reviewed the number, it is a continuous affair which we do on a quarterly basis, and when we observe that there are some of the inventories are not moved for more than 9 months or so. So we have made just a provision. It is just a provision, probably, and it is basically for 1 or 2 models which are slightly has not sold in the previous 6 months or so.
Just to elaborate there, I would like to add. See, we do a lot of different types of machines and lot of different capacities and variants within each type of range of cranes or equipment that we do. So sometimes, yes, certain slow-moving components get stuck because we are expecting some orders and then they don't turn up in time.
Yeah.
So yes, that is the provision. How much is the value for that?
Yeah, basically, as Mr. Saurabh informed, that this is only a provision, and once the machine will be used, which we are confident, it will be returned back to the books of accounts. And it is just a provision, only there 4 crores or so.
4 crores. I hope you're able to answer your question.
It seems that we have lost the connection from the current participant. Okay. Before we move to the next question, a reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Rashmika from Zika Enterprises. Please go ahead.
Hi, congratulations on a good quarter. I have a few questions.
Yeah.
My first question is, European competitors like Lebeher are entering the large crane business in India by setting up manufacturing facilities. These European competitors have better technology than we do. So how are we going to compete with these European competitors in the large crane business, given their better technology?
Okay, I'll answer your first question first. Sir, in the last 30-40 years in our country, all possible competitors that you can talk, whether European, whether American, even Japanese, are in the country. It depends. The Liebherr again is one of the largest companies in the world for construction equipment. I suppose they should be number 2 after Caterpillar. They have a very wide range. So I'm sure they are planning for specialized mining equipment and to bring into India. Because in other segments like tower cranes and similar to us, they've tried to compete in the last 15-20 years. They already had a facility, a small one. Practically, if I talk of tower cranes, we are the market leaders there. Going to the technology part, whatever we are manufacturing in India, in certain equipment there's high-end technology. So our ability, and especially I would say the factor of safety, the safety devices, everything is as par to global standards. And going by that, we were also the first in the country to come out with an electric consumption system form of a 15-ton pick and carry crane. And also aerial work platforms, self-propelled aerial work platforms, working at heights of 21 and 27 meters. Which are perhaps one of the most complicated piece of equipment that we have evolved so far. There are very complicated electronics involved because of the safety aspect, because people are working at heights on these machines of 21 meters and 27 meters. So we are abreast with technology in the world. Rather, we started exporting machines in the last 2-3 years. Our exports, even in the current quarter, surpassed our own expectations. And I think the first half itself, we have done actually more than 10% of our revenues come from exports. As of now, rather we are working on evolving 2 specific models of backhoe loader and a machine called telehandler, which is not sold in India, only for the export market. Technology is not an issue anymore, and most of the leading hydraulics and the other similar technology companies are already working and functioning in India. So we get support from them as well.
Even accounting for Chinese dumping, what is the minimum EBITDA margins we are expecting in the large crane business? Even accounting for Chinese dumping, what is the minimum EBITDA margins we are expecting in the large crane business?
Yes, sir. I will answer your question in 2 parts. I totally agree with you that in the large crane business, it is absolute Chinese dumping which is happening. I mean, the cranes are priced at half the price of what they were 15 years back, which was also a very competitive price. With steel going up from 25-30 rupees a kg to an average of 60 rupees a kg. With their import prices taking a hit because dollar was 40-42 at that time in 2008-9, and dollar is 82 now, more than doubled. Absolutely, Chinese are dumping, and our government is also observing that very closely. We are very hopeful that, in short to medium term, certain actions will be taken in that aspect. But yes, even looking at the dumping and everything, we are still hopeful of doing an EBITDA of upwards of 10% in this business. This is in the current scenario when they're dumping at crazy prices, and they've been doing that for the last 4-5 years. But with our experience of Chinese in the past, to capture the market and to control the market, they carry on this activity for 4, 5, 6 years, and it has already been 4, 5 years. So one of these players already started increasing the prices in the last 6 months. Going forward, over the next 1-2 years, the pricing has to move northwards, good for the Chinese. And definitely for sure some government support will also come in.
We have not done well in the materials handling business and the agri-equipment business for some time now. Materials handling is particularly surprising because manufacturing is booming in India and you would expect the materials handling business to do well, but it has not done so. So what is going to be our plan to revive these 2 businesses and bring them back to growth and profitability? And what is your outlook for these 2 businesses, materials handling and agri-equipment, for the next 2 to 3 years?
I agree that material handling could have grown faster. But if you look at the current year, and especially starting with the current quarter, I think we've been able to grow it 26% on a year-on-year basis. Compared to our cranes, which is at 29%. It's slightly slower than cranes, but growth is on track. Can be faster. And even at the beginning of the year, we have projected about 15 to 20% growth for our material handling segment. So yes, I totally agree with you. It can be faster than that. And we are working on all possible fronts to see that it grows faster than whatever rate we are going at. Currently, we are expecting it to be between 20%. But definitely Q3 and Q4, I think we feel that the growth can be faster than this with all the corrections that we have put in place. And if I talk of the agri-equipment, if you look at the yearly basis, we have grown by about 33% there. And on a whole year basis, we expect to grow by about 15-20%. I think that going forward, the metal handling will be faster than 15-20%. Agri will, I believe that in the current scenario will be there somewhere around 50 to 20% in the next 3 years.
Finally, we are already 1 month into the current quarter. How is demand shaping up? And how do you expect demand to shape up in the next few quarters?
Demand in October also, the festive season started, and with the Prasraj and everything falling. So demand was very good in October. We have moved into November. And generally in the Diwali month, slightly tapers off primarily because, people get busy in the festivities and the festival, and about 3 to 5 days are lost because of holidays. So it slightly tapers off, then picks up again in December. So October was good. November is in line with what happens every time in the Diwali month. The demand is very much there and staying strong. So we expect December to be similar. If I talk of the quarter 3, definitely it is going to be reasonably bigger and better as compared to quarter 2 with the type of orders that we have in hand and execution that is happening. And also, with our additional capacities coming into play in this quarter, that will also help us in, doing definitely a much better top line than what we did in quarter 2. Things seem to be in line. Quarter 4, if you look at our company, traditionally about 55 to 60% of the business happens in the second half of every year. That is quarter 3 and quarter 4. And going by that, and this has been happening for the last 27, 20 years, year on year. So looking at that, definitely second half will be bigger as compared to the first half. How big that would be, I think January will be the best time I'll be able to answer that. Definitely it's going to be bigger than the first half. And then looking at that and what we've been able to achieve in the first half, see that earlier we had projected a growth of 20 to 25% annually, but I think if we do this of 25%, can be even higher, but I think January will be a better time to answer that question.
Okay, that is it from me. Thank you very much and congratulations on a very good quarter and keep up the good work.
Thanks a lot, sir.
Thank you. Before we move to the next question, a reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Amol Rao from Kitara Capital. Please go ahead.
Congratulations on great set of numbers. We seem to be outstripping our previous quarter's performance now by habit. So just a couple of questions, sir. One is, there was some chatter about change in emission norms for construction equipment. Is this still on the anvil or has the timeline not been finalized till now, sir?
Okay, thanks for your lovely comments. And then regarding your emission questions, the BS5 emission norms for CEV, construction equipment vehicles, supposed to kick in from 1st of April. And obviously they're very busy preparing for that. Most of our R&D bandwidth right now is occupied there. And but yes, our association has moved with the ministry 3-4 months back that this needs to be postponed by at least 6 months to 1 year. And we have had positive indications from them. We have had meetings at the topmost level with the Ministry of Road Transport and Highways. And I was also personally there in 1 or 2 of the last meetings. So hopefully, post-Diwali, we should see this getting deferred by at least 6 months, if not more. So this is the indication that we have. So this might get deferred to September or December next year instead of April.
And so, because why I ask this question is because several years back when we had the transition to BS4, there was an increase in the cost of the equipment. So since we deal with engine OEMs, what is the indication that they are providing, that what could be the increase in cost for this compliance on their end?
I think it will be close to about 5% increase, 4 to 5%, depending on different engines and models. Because this is for engines which are bigger than 50 horsepower. Because the BS4 norms for construction equipment vehicles were made applicable for engines which are bigger than 50 horsepower. But once it is done, and 50 horsepower smaller ones were left at BS3. But with this next upcoming change, the smaller 50 horsepower from BS3 are going direct to BS5. And 50 horsepower and bigger engines of BS4 are going to BS5. So BS4 to BS5, we are expecting 4 to 5%. But from BS3 to BS5, 50 horsepower, I think the impact is going to be even higher and should be in the tune of at least about, let's say, 10% plus.
Got it.
5% to 10% depending on engines.
Okay, sir. So you alluded to the capex concluding in Q4. So that should basically help us with the high capacity cranes. So should we be seeing some rollout this year, or probably the rollout should be in quarter 1 or quarter 2 of next year?
There are things that we have done, so I will explain everything. One is that that 100-acre industrial park where we had land available. So we've set up a new facility which is for high capacity cranes, 2 cranes. This is one. And then with respect to our fabrication capabilities, we have expanded and nearly doubled them with respect to our other equipment. Somewhere we receive by 50%, somewhere by 100%.
Correct.
So, and in this now the 2 things I mentioned. One is expansion of capacity within our existing plants by expanding our covered areas and adding machinery where we have space available and land available with us. So 2 aspects. Now going to the high capacity crane. Already we started some work in this new facility, but it will be totally commissioned only by January 1st. So we will actually start rolling out machines from there sometime in, I would say, maybe February or January, close to that, plus minus 30-40 days there and there. But we've already started work there with respect to the other components and fabrication. That has already been moved to the new plant. Now what is going to happen once the entire activity of the bigger capacity cranes shifts to the new plant? In our existing plant, where we were doing these bigger cranes, high capacity cranes and tower cranes and forklifts. So this was one big single plant. So this will help us increase our capacities for tower cranes, which we have already been able to increase in this current quarter because, like I said, some part of the bigger cranes has already moved to the new plant. And in the next quarter, again, our forklift capacity will increase. So not only that we'll have capacity to make 4 to 5 times more numbers of bigger cranes, our capacity to make tower cranes and forklifts is also increased by 40-50% by this restructuring of a new plant coming in and the existing being used for other activities with the required machines is one part. And the second part is wherein we have for our existing capacities for smaller cranes and backhoe loaders and other machinery. So that capacity is already been put in place. It has been made partially functional, and by December it will be fully functional. So from about 700 pick and carry cranes in a month, our capacity will go to 1,000, 1,100 in a month. So let's say from 8,000 something annual capacity for pick and carry cranes, we will be upwards of 12,000 per year. So which is be partially activated. With this we'll be able to feed the current quarter, and will be fully functional in the by end of this quarter. Simultaneously, our main assembly plants for the pick and carry cranes, they are also under expansion. So that will finish by end of quarter 4. So once that is done, then we are 1,000, 1,100 cranes capable totally. Today we are capable of 800 to 900 cranes per month.
Got it, sir. That was most helpful. So my last question was, we were hopeful of the resolution of that small confusion on the funding of the Ghana project, government-to-government funding of the Ghana project, sir. So, sir, is there any development on that end, or it's probably another 2-3 months down the line?
As per the latest update I have from my export team, people who are looking after this project. So everything seems to be on track. We were expecting clearance within quarter 3. So as of now, this is the indication that we have. I mean, it will be very unfortunate if it gets shifted to quarter 4.
So we start shipping, not shipping out, sorry, we help in the setting up of that plant probably in quarter 4, right? That's what you are suggesting, sir?
Only after, our credit lines have been signed, they are available with us, but only after we receive our mobilization advances. We are not going to invest any money in Africa without the payments being totally upfront.
Absolutely. So thank you. This was most helpful, sir, and wish you the very best, sir.
Thank you. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Surit Deora from Paladin Capital. Please go ahead.
Good afternoon, sir. First of all, congrats on a simply superb performance. I hope you continue to do well in the years to come. And
you're working very hard, trying very hard.
So I actually missed your initial commentary. I dialed in a little late, but did you provide any visibility for FY25, or do you have any visibility for how next year might look, considering it's an election year?
See, going by the overall feeling and trends, things are very buoyant in the country. So I feel that around the election quarter, there might be some hiccups here and there, maybe 10-20%. We really can't predict. But all of us have always noted that post the elections are over, the results, whichever way they go, and all of us are very hopeful that they'll go the right way. So I really don't see a problem, and doing a 15-20% should not be an issue, even in the next year. But in saying that, again, I would say that Q1 would be a much better time next year to be talking on this. But I think we will still plan for a 15-20%, whichever way.
Do you retain your longer-term vision was to get to double of FY24 by FY27?
Yes. From whatever level we finish at in this year, we'll be targeting to double our revenue in 3 to 4 years after that. So FY24 finishes, so FY27 will be 3 years. So FY27 to 28, 3 to 4 years, again doubling up our revenue. It will totally depend not only on us, but also on the overall situation around us, the economic situation in the country, in the world. And if the current government comes on in the form and, the way they have been working and doing, I think it should be possible within FY27, if not FY28. Because if I talk of in FY21, we have planned for FY24, we will double up. So from 1,200 crores, we're looking at 2,500 crores. And I'm sure we'll end up much higher than that within these 3 years. So, it's anybody's guess, but doubling up in 3 to 4 years should be there, should be happening. And we are also opening up these bigger scoop cranes, so that will also add in chicken in revenue. Our aerial work platforms, those deliveries will start. We will be changing the market to electric cranes, so the realizations are better. To some extent, BS4 to BS5 upgradation will help us in further improving our price across the range, because a lot of machines are going from BS3 to BS5. And, FDI in manufacturing, I just read an article 2 days back in Economic Times, so that is also maybe increasing at some sort of all-time high, generally going down in China. Infrastructure is our forte, about 50-60% of our revenue. That has to continue. There's no other way our country can grow. So looking at all these positives, I believe it's doable, easily doable.
You mentioned the larger cranes, and I remember there was some discussion of ADD or some announcement of ADD in the last 1 month. So the impact of that will be beneficial to us, I'm guessing. We'll have higher volumes and higher margins as a result.
I would say higher margins because the market today, about 800 to 1,000 units, is divided between new imports and used imports, with used imports coming from Middle East, Europe and America being more than the new machines. And the main factor is the prohibitive costs of import from Europe and America, where the leading company for these products are. So with our expanded facilities, we've already delivered some machines, but we will be starting them in quarter 4 in a much more substantial way. So yes, the numbers will increase, but they are more bottom line aggressive with respect to the margin profile.
Okay. And then also, I'm guessing as construction equipment does better and is done sort of phenomenal growth, so as construction equipment also becomes a larger piece of the pie, is it fair to expect margins to overall move towards 20% EBITDA margins?
I would love to do that, but then we'll end up leaving a lot of scope for competition. So I think we are already at about 15%. So sustaining and maintaining it would be our first aim. And then yes, if the market allows, we would definitely want to increase it by another 2-3-4%. We will not leave the chance, but we are going to be very calculative in doing that.
And I was saying because your fixed costs will continue to scale, right?
But other products which are more margin accretive, 20% I can't really say or comment. But yes, the margins can further be more found, yes.
Okay. And lastly, on the M&A side, are all the transactions complete or is there something still pending?
2 small ones as conveyed earlier, they have been done. And, one has gone off. It was a company which was an NCLT, but being a SME, the promoters have got a chance to again, they take it over and try to run it. There are still 1 or 2 in the pipeline, and which we've been discussing everything last 1.5 years. So, but no movement on account of the valuation front between the 2 of us. It seemed we were closed about 1 year back. So let's see how it pans out. But we have kept our eyes and ears open, and we are right now also looking at, because we want to, this year our exports will go to 8-9% of revenue. And we want to take it to 10-15%, even higher going forward. So looking at that, we are also looking at, and India will go to Tier 5 or let's say CEV 5 emission standards, which are similar to European standards in the next year. So keeping all that in mind, we are definitely looking at some small acquisition even outside the country, wherein we can go to mainland areas in developed parts of the world. So let's see, a lot of things are happening. It's a dynamic world, so let's see how it pans out.
No requirement for any further equity, right? I hope.
We not as of now. We are debt free. We have enough, cash available with us. So nothing as of now for any of these things, unless something major comes up, which I would imagine should happen in the next 1 or 2 years. But not in the next immediate future. Yes.
Okay. Thank you, sir. Thank you. All the best.
Yeah. Thank you.
Thank you. Next question is from the line of Rajiv Maheshwari from Praj Investments. Please go ahead.
Good afternoon, everyone. Thanks for taking my call. The first part of question is regarding, there was some buzz in the media regarding some PLI scheme being given to the construction equipment sector. So can you update what's going on, or whether it's still under discussion, or is there any plan that the government is extending?
Yes, it is being discussed at the highest levels as of now with the government, and the revised proposals with respect to different types of machinery, and also including some components for construction equipment which are still not done in the country or are required in higher numbers going forward. So all that discussion is happening, and the government is also seems to be reasonably keen on this PLI. Things are going on, so I think we should expect something over the next 2 quarters, I believe.
So it still will take around 2 quarters to materialize. That's the earliest we can expect.
The way things are moving can happen faster.
And in case if it happens, what are the products which will be covered in that scheme as far as our product line is concerned?
We have tried to ensure that everything we are doing and certain things which we intend to do are covered in that.
Okay, so majority of the product line will be covered.
I would say nearly everything. Yes.
And what's the update in terms of the commercial production of electric cranes? How are we going on that in terms of any orders or something?
Yeah, you see, it has been very unfortunate. We evolved this in January. We showcased it at the exhibition. But I think the government of India never expected that India will evolve its own electric construction equipment nearly at a similar pace with the world. So our CMVR norms, Central Motor Vehicle rules for electric CE construction equipment are still under formulation. They are nearly at finalization stage. Earlier, we were given to understand that they'll be done by June, then by September. So we are very hopeful it will be finished in this quarter. And without that, the only issue is that we are not able to sell the machines because there will be no registration on it and they cannot fly without registration numbers. So hopefully they should finish off in this quarter and we should actually be commercially be able to produce our electric cranes from Q4 onwards. That's what it seems as of now, but things get delayed another month or two here and there.
Okay. And any further orders or things in the pipeline in terms of government or defense sector?
It is a continuous process. Even in the last 2-3 months, 2 months I would say, September, October, we have got orders for, I think 30-40 orders for pick and carry cranes, and I think it was, I'm forgetting, it was base workshops or DRDO, I'm forgetting. Okay. Another 60, the bigger size forklifts, each one of them costing about 30-40 lakhs from the Air Force was processed. Another order for about 90 forklifts, I think it was 2 tons or 3 tons, that's also more or less gone through. So it's a continuous process. It is happening. Because like I did mention earlier, certain things which once they get inducted or used in the army and the performance is well, then it keeps on repeating. So these things have been, like I mentioned, last 2 months, we got orders of nearly 150-200 units of different types of machines from Army and the Air Force, Indian Defense Services. And as a matter of fact, currently we are executing order of 18 numbers of these higher capacity slew cranes. So these are rough terrain cranes, 40-ton capacity and 75-ton capacity. So which actually we had to, and this was new development for us, these 2 models, 40 tons and 75 tons, which are required by Indian Navy.
Okay.
We were actually scheduled to finish execution within December, but I think it will finish within Q4, so Q3 and Q4. So this was also a sizable order because the 40-ton machine, the bigger ones, they were each machine about 2.5 crores, the smaller was about 1.5 crores.
Okay.
So there are maybe 40-50 crores, which is under execution as of now.
Right. That's great. Good to see the things moving on a regular basis on this side also. Right. That's okay from my side. And once again, congratulations for the superb set of results.
Yeah, as a matter of fact, at the top of defense, just post Diwali, we are fielding a machine for no cost, no commitment size. Okay. It happens in the Army's new development, and I think the cost of each of those machines is about 35-40 lakhs and per machine, and the requirement is 1,800 units.
Okay. Because of
700 to 1,000 crores worth of requirement for a particular specialized machine which Army has got developed. Okay. With 2-3 big players from the industry competing, we are one of them.
Okay.
And, but yes, that will fructify and things will happen only in the next 1.5 years. Because now it will go for trials and it will happen for 6-7 months and then commercials. So I think it's still 1.5 years away. But once that comes, that's again a huge order.
And in case if we get through, it will be very prestigious for the company as such also.
Yes. And most importantly, the type of work that which these machines are doing.
Yeah.
These machines are meant for the ammunition dumps, underground ammunition dumps, which are spread all over the country, for moving the ammunition in and out.
Okay.
So it is also a very, a hardcore production machine which will be used during wartime.
Because nowadays what's happening in the market is any company linked to defense sector is running like anything. I'm talking in terms of the stock price. So that's the flavor nowadays. So any media report linking to defense is always good for the shareholders as such also. Anyway,
last 2 months we have not printed anything on defense and air force. So
yeah, actually, I was wondering that even in we did not get any update from this.
Sir, we were too busy making machines, increasing capacity. But I think all this news, Vyom, let us put it together on the website immediately.
Because normally either it's shared with the stock exchanges or we can get it on the website. So many things have happened in last 3 months, but we were not aware. But anyway, if you can update it on the website, we are all updated with it.
Sure, we'll do that.
Okay, right. Thank you so much.
Yeah, you're welcome.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Participant, to ask a question, you may press star and 1. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Next question is from the line of Deepak, an individual investor. Please go ahead.
Hello, sir. Congratulations on a good set of results. In the last phone call, there were some discussions around some sort of outsourcing opportunity in a white labeling for export and maybe a kind of play around in the developed markets. Has anything been materialized there?
Nothing materialized so far, but like we did mention, 2-3 such prospects are in really good stages. So let's see. I really can't put a timeline to it, but with respect to certain, sophisticated, complicated components as well as machines, these discussions are going on. And if everything goes well, we should be able to announce something in Q4.
In Q4, okay. In the last question, sir, sorry, I joined the call a bit late, so if this was already answered, any further update on the Ghana project, where it got delayed by 1 or 2 quarters, but when can we see a materialistic revenue recognition in the financial?
Our advances in this current quarter, so that's what the update is. If that happens, then obviously execution will start Q4 onwards. And but I think enough has been, a lot of delay has happened from the government side in Ghana, and I think the latest indication we have is that it should go through within this quarter with respect to our advances, because all the credit lines have been established. The mobilization is on. So hopefully it should go through in this quarter, and we should be able to start our execution in next quarter.
Okay. Thank you so much, sir, and congratulations for a good result.
Thank you. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions from the participant, I would now like to hand the conference over to the management for the closing comments.
Yeah. Like we discussed, things are going good, and we should be able to clock at least 25% revenue growth in this year. But I believe that it can be faster than that. And obviously our margins have expanded and will continue to expand further. Let's see wherever best we can take them to. And our capacities will totally be expanded, and the increased capacities will be put in place totally in Q3, and whatever is left within Q4. So that will also give us the ability to take our revenue to 4,000 crores with respect to our capacity. And in all probability, our electric trains and aerial work platform deliveries should also start off from Q4 onwards. Our focus on export remains very much, and will definitely be increasing our revenue in the current year, contribution coming from exports, wherein our long-term targets are at least 10 to 15%, if not more. Defense business is robust, and we continue to get orders more or less on a regular basis from different defense entities as of now. And we are going to be increasing our presence in the higher capacity trains very soon. And, our short-term, medium-term prospects look to be okay. Long-term, everything is in place. So, and we're looking at 25% growth. That's it. And thanks a lot to everybody for joining in on the call. Yeah, that's it from my side. Yeah, thank you.
Thank you. On behalf of Motilal Oswal Financial Service Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.